Hey everyone, welcome back to Corporate Decoder, the place where we decode all those boring, confusing corporate filings. Today, we are diving into a Form 8K. Think of it as a company's, did you see what just happened? Report to the SEC. And this one, it's got loans, value drops, and some distribution news. Sounds like a party, right? Daily scroll, date of report, date of earliest event reported, February 15th, 2025, sit scroll. So, let's start with the basics. This report is dated February 15th, 2025. That's the date of the earliest event they're talking about. This filing itself, though, is dated February 21st of the same year. First up, there's an entry into a material definitive agreement. That sounds super official, but it just means they made a deal that's important enough to tell the government about. In this case, it involves money. Scroll, amendment to revolving loan agreement. Scroll, specifically, it is about an amendment to revolving loan agreement. Think of a revolving loan like a credit card for a company. They can borrow money, pay it back, and borrow again. This company, CNL Strategic Capital, through a subsidiary, has one of these with Valley National Bank. On February 15th, CNL Strategic Capital B Inc., which is their borrower company, made some changes to their loan agreement with Valley National Bank. To scroll, $50 million, $50.0 million revolving line of credit to scroll. They already had a $50 million line of credit. The important bit, they might be getting more. The bank, Valley National Bank, might increase it to a maximum of $100 million if they want to. So the line of credit could be up to $100 million, giving them access to an additional $50 million. If they use that extra $50 million, they have to pay a fee. It is a small commitment fee of 0.25% on the extra money borrowed. That's basically the cost of having that money available. Cajun, they also extended the loan. Now, it's due February 15, 2026. That's when they have to pay it all back or renegotiate. The borrower paid a fee of $125,000 initially. With this extension, they paid another $125,000, so it cost them $250,000 in fees just to have this loan available. One scroll, the 1-month term secured overnight financing rate, SOFR plus 2.75% said scroll. They also have to pay interest on what they borrow. The interest rate is something called SOFR plus 2.75%. SOFR is like a benchmark interest rate. The rate changes, but they pay SOFR plus 2.75%. Here's another fee. They also pay 0.15% per year on the amount of the $50 million they don't use. So they pay for both using the money and not using it. If they borrow money, they have to pay it back within 180 days. That is roughly 6 months. The company has to follow rules. They must give the bank financial reports. They also can't take on too much other debt. CNL Strategic Capital LLC is guaranteeing the subsidiary's debt. If the subsidiary can't pay, the parent company has to step in. The borrower also has a pledge agreement. They are required to keep funds from the company offering in Valley National Bank accounts. This is collateral that the bank could seize if something goes wrong and the borrower cannot repay the debt. This section just confirms that this loan agreement creates a real financial obligation for the company. Now let's move to other events. This is where they talk about other important stuff that happened. Scroll, determination of net asset value for outstanding shares for the month ended January 31st. 2025 sets, scroll, first they determined the net asset value or NAV of their shares for the month of January. NAV is basically the value of their assets minus their debts divided by the number of shares. It is like a book value. The board of directors figured out the value of each share class based on their policy. They have different classes of shares, class FA, A, T, D, I, and S. Each class has its own NAV per share. Here's the snapshot. The total net asset value is $1.238 billion. They have about 34 million shares outstanding in total. The net asset value per share varies by class but is in the $35, $40 range. Compared to last month, things went down. Each share class saw a small decrease, about 10 cents per share. So scroll, primarily driven by the increases in the fair value of 10 out of 16 to scroll. So what happened? The filing says the value decreased primarily driven by the increases in the fair value of 10 out of 16 investments, while 6 portfolio investments went down. So some investments did well, others did not. Scroll total assets of approximately $1.25 billion. 6 scroll. As of January, the company had about $1.25 billion in total assets. Next up, public offering price adjustment. This is about the price of new shares they're selling to the public. The board approved new prices for each class of shares. This goes into effect February 27th, 2025. The price varies by share class but is similar to the net asset value we mentioned earlier. Class A, for example, is $38.89. The selling commissions are $2.33 a share. There are also dealer manager fees of nearly $1 a share. Now we get to the good stuff. Distributions, this is the money they are paying out to shareholders. The scroll declared cash distributions on the outstanding shares of all classes of our common shares. The scroll, they've declared cash distributions or dividends for all share classes. The record date is March 26th and payment date is the next day. They're paying different amounts per share depending on the share class. The distribution is roughly 10 cents per share. Finally, return information. This section shows how well the investments are performing over different periods. YTD is the year to date. Some classes show small gains, others show losses. The 1-year return is stronger with gains around 10%. Since the beginning, the annualized return is about 11% depending on the class. For the year, the company paid the distributions from multiple sources. Over half of the money came from net investment income, a small portion from expense support, and a large amount came from offering proceeds, that is, money from new investors. Scroll this information on our website at www.CNL Strategic Capital. Can say scroll. They posted this information on their website too. So what does all of this mean? CNL Strategic Capital is taking on more potential debt. The company also saw a slight decrease in its NAV but continues to pay out distributions to its shareholders. The distributions are coming from a mix of investment income and new investor money. Looking at the numbers, a major weakness for the company is that they seem to be highly reliant on raising money to pay dividends while having small investment returns. Paying out too much in dividends might make it hard to grow the NAV down the road. One thing that could help them is if they increase the investment income. This would provide more assurance that future dividends are sustainable. Based on the current NAV of around $35, $40, and considering the risks I mentioned, I would consider the stock to be around that range. In my opinion, I am going to rate this report a neutral rating. Thanks for watching. If you found this helpful, please subscribe, like, and comment.